We've got a lot to talk about with gold flying through the 2000 mark today. And let's talk about why, first of all. U.S. job openings near 2-year low. The number of job openings in the U.S. fell by 632,000 to 9.9 million in February, the lowest level since May of 2021 and below expectations of 10.4 million. The largest decreases were seen in professional and business services, healthcare and social assistance, and transportation, warehousing, and utilities. Meanwhile, the number of hires and total separations changed little at 6.2 million and 5.8 million, respectively. So let's jump into the charts and see how this news has impacted our favorite gold chart. Well, it's fair to say that the gold market was really happy with this result. At least the gold longs were. It's a little bit of a concerning news to hit the floor, but we nailed right through our $2,000 target that we have talked about recently and have since then not stopped since the time of at least making this video. We saw a straight shot all the way up to 2020, marking a new high for gold's price recently. This is the 4-hour chart here, and you can see that this level, the 2000 mark, was a huge psychological barrier for price. But today, it seems like, at least so far, gold has started out in the right direction for potentially breaking out of this previous high. Let's now mark this for what it is. So if we change this, it's probably going to be a demand zone. And you can see I've got a trade open on the gold market. In fact, I'll pop up on the screen now a screenshot of my current positions and on my Webull account where I actually take my trades. As a US client, I can't trade CFDs on regulated brokers, so I use Webull, which is a regulated stockbroker, where I can still trade ETFs that track the price of gold. And I'm long gold, and wow, what a pop here today it was. At this point, my goal is to trail stops and lock in some gains here, especially once this candle closes on the 4-hour chart. If we're able to close above this 2000 mark, guys, I think that has signaled that the gold bulls, at least in my opinion, are here to stay for the time being. Now, as we break above here, like I said, we've got, at least at the time of filming this, about 2 hours until this candle closes. By the time you guys see this video, it may have already closed. But I'm watching to see how this candle closes to basically manage my position. My initial stop loss is still just below market structure here. And so I am looking to trail stops, perhaps even into profits, just below this 2000 mark. But I'd really like us to stay above the $2,000 mark to stay bullish on the gold market. Now, that's my take on gold for now, but let's also take a look in terms of not just the price action, but also the Smart Money Tracker. If you guys have been watching the channel, you already know where I'm going with this. Smart Money Tracker, no coincidence here that the #1 buy from institutional data right now is, of course, gold. And this is not speculation. We are actually talking about taking a look at the COT data. We can see what institutionals are buying and selling through this data. It's not speculating, not trying to interpret what the candlestick patterns are telling us about what price action. None of that. We are looking at the COT, the hard data, to see what gold's institutional activity has been. And we can see this right here. We've talked about this in recent videos. We had an increase in the most recent reporting. Increase in long contracts open on the futures market, overall 245,000 long contracts and only 63,000 short contracts. A decrease in short contracts even in the most recent filing, showing a clear and strong preference to be long gold, which is why, part of the reason why, myself, I am long gold. And we could take a look at the retail crowd as well. And if you are a regular, I'm going to ask you right now to think mentally, do you think the retail crowd is long or short on the price of gold? When it's popping like this, when it's trending up, is retail buying this market or are they selling this market? And I already know the answer without even looking at the stats, but let's just look at the stats anyways. The answer is retail traders are going to short this. This is just a recurring pattern. When a market trends up like this, here it is. 72% of retail trading positions sentiment is to the short side on the gold market, giving me further confirmation to actually be bullish on the market itself. So if I take a look here and I pull up the commodities market, we've got gold here. You can see that the Edge Finder has a +5 buy rating for the gold market. And it has been this way for the last few weeks. We've caught some incredible run-ups here recently using the software. By the way, guys, we're going to take a quick second. If you have not already gotten your access to the Edge Finder, now is literally the best time of the year to do that. Yesterday, we announced our 1-year anniversary sale. That's right, 1 year into making this product. We've worked on this thing for an entire year. We've got several people, contractors, designers, developers, people helping us make it look good and appear right, and explaining how it all works. And the trading team behind it has also worked heavily to design this. We are celebrating 1 year of development of this product, and to celebrate that, we are doing right now a massive discount price. And I'm going to give you 2 bits of information. First of all, if you just want to grab it, access to it, it's 40% off using code YTVIP down below in the description. But I've got a little secret for you. If you made it this far in the video, I have a way for you guys to get access for an even bigger discount. And let me show you how. If you head over to our website, we have people in the office, people who are trained to help set people up with the tools, give them training. I want people that want to get access to this product. Go get yourself some training with it. Make sure you fully understand and ask your questions. To do that, head over to the link down below in the description. It'll take you to a chat log. Click chat now and click tell me about your discounts. Fill this out, and one of our support reps will give you an even bigger discount for a very limited period of time. If you're interested in the product, do not miss this opportunity. Click the link in the description, head over here, and hear about our discount that we're doing right now. It is an extra discount if you chat with one of us on the website right now. So take advantage of that and don't miss the sale. And again, part of the reason we're doing such a steep discount is because in order to continue to build this product, we really do need more funding. It is a very costly project for us. And in order to do that, we sell copies. We sell copies, we give it out to people, and then that allows us to raise capital to continue paying developer fees and all sorts of stuff to continue to build it. Anyways, let's continue on. Enough about the Edge Finder here in terms of getting copies. Let's talk a little bit about other signals. I liked Euro Pound here, and I want to go through this with you guys. Let's go look at Euro Pound. Minor currency pairs. I'm going to pull up Euro GBP, and we get a sell bias on this one. And when I was looking at the chart this morning, I actually really liked this thing. The problem is, though, it's got to break this level here. So we're looking left, we've got support around the 87.40 mark. If we're able to break through this here, and it's not quite looking like it wants to here today, but if it does break through support, it may actually be an interesting retest sell, with contributing factors being, we have essentially a downward trend. We have retail sentiment is very long, so retail is very, very much buying the Euro Pound. So that goes in our favor. Seasonal trends, you can see the month of April is historically slightly negative, and we could pull up seasonality in a little bit more detail in a second. Trend to the downside, like I mentioned, GDP growth, unemployment, and interest rates favor the pound over the euro. So in my view, if you're very long biased on the pound, it might be an interesting one to keep an eye on if you're looking to, like I said, buy the British pound. Not my favorite trade to be long the British pound, if I'm being completely honest, but against the euro right now, it seems to have some nice opportunity. Now, big red flag here. Institutional money is against us on this. So, and again, this is why we use all the data that's available to us so that we can get a full picture. If you didn't know this, you might have missed the fact that institutional money is piled into a short on the pound and a long on the euro. So might not actually be a trade setup, but at least from a technical perspective, a very interesting chart right now would be a breakout of this level. We'll watch it. We'll continue to monitor it and see if there's anything to trade going forward. Now, on the long side, Euro JPY. I love this chart long. It actually looks really, really appealing to me on the long side. I talked about this on our live stream here today, and if I pull up Euro JPY, we can see some contributing factors. So, let's start with, in terms of COT data, we get some nice confidence. So we have the euro, 74% long, the yen, 87% short. So a clear, distinct preference from institutional money to be long this pair. Euro JPY, on the retail sentiment side of things, the crowd is very short. And in terms of economic figures, it's a little bit mixed, not too much of interest there. Nice upward trend. Seasonal trends, and I mentioned that I would show a little bit more seasonal trends. Let's pull this up here. So if we go to the seasonality tab, and we're going to go specifically to our Euro JPY idea. Let's see, where is Euro JPY? There it is. Okay. So we'll go to Euro JPY, and we'll let that load for a second. So from a technical chart perspective, what I really like here is that we had this downward structure that broke to the upside. So we had a flip in directional bias here from the chart. series of higher lows on the 4-hour chart. I really like this. If we get a poke down into support here, right, a quick blip down into the 143, I'm not saying much more than that, because if it starts breaking that, I'm no longer interested in this idea. But a discount, right, a sell-off down into this zone, in my personal opinion, gives us max risk to reward on this nice upward trending chart. Now, you guys know I'm not a huge trend line fan, so I'm not necessarily just buying this just because it's hitting a trend line, because again, trend lines can be drawn in different formats. In fact, we could even take it off the chart altogether. My basic idea is we've got nice higher lows going on in this chart. If we retest a level of support like 143.6, let's call it, I like it long, and I think that the risk reward becomes really pretty optimal in this area. So the idea would be like stops below this structure low. Like if markets come underneath that by any amount, I'm probably just going to avoid the trade. But even just this, whoops, I messed that up, sorry. Even just this idea here has a really great risk reward. This is like a more than 2-to-1 risk reward with just a stop loss below market structure here. All right, so as price comes down into this zone, if it holds and we just continue to trend up, could be an incredible risk reward trade. And if you know the yen pairs, you know that yen pairs, why I like them so much is they tend to trend very well. When they're in an upward market, a lot of times you get some excellent runners. And then when they flip, they flip. So again, the downward structure here flipped. We are now in a bullish cycle, and until that changes, I'll be looking for longs on pullbacks, especially with the contributing factors that we talked about. Now let's talk a little bit about seasonality. What we can see here is that on the seasonality or the seasonal trends page, we can take a look at the Euro JPY and see that in the month of April, the last 10-year average has been to the upside, and in the last 5 years, it's also been very, very much preferenced to the upside. Again, we also have our weekly breakdown. We just added this chart. This is again one of the newer developments of the Edge Finder. Week by week bias or overall historical trends. You can take your time to look at this. If you'd like to pause the video or check it out for yourself, if you have the Edge Finder, you can see those biases there. So yeah, I do like the seasonal trend. I personally really like these two charts. This has been my favorite seasonal way. It's a very, very simple way to just look at, historically speaking, which months tend to be up, which months tend to be down, so on and so forth. And you can find this under the seasonality tab. Remember, like I said, guys, message us for that significant discount. The link will be down below in the description. Thanks for watching. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.